Have you ever wondered if there's a way to build real sustainable wealth while generating passive income and slashing your tax bill all at the same time? Welcome back to another episode of the Vital Wealth Strategies podcast. I'm your host, Patrick Lonergan, and today's episode is one you're going to want to listen all the way through. I'm joined by Beau Turner, founder of Abundant Minds, a company that's making crypto mining simple, secure, and surprisingly tax efficient. This isn't a technical crypto talk. This is a strategic conversation about how business owners and investors like you can use Bitcoin mining to generate cash flow, unlock serious tax advantages, and diversify your income in a way that aligns with how the financial world is evolving. We break down what Bitcoin mining really is in plain English, how to know if it's the right fit for you, and why the next few years are such a critical window of opportunity. Beau even shares how you can structure your mining operation to potentially lower your tax liability using tools like depreciation, bonus write-offs, and even self-directed retirement accounts. So if you're someone who's tired of the traditional investment roller coaster, looking for smarter ways to grow and protect your money, or just want to understand what the potential future of our financial infrastructure might mean for your business, this is your episode. And if this gets you thinking about how to incorporate strategies like this into your overall tax and wealth plan, visit vitalstrategies.com/tax. Our team is eager to work with you and help you start building a strategy that's aligned with the way you live, earn, and invest. All right, let's dive in. Beau Turner, thank you so much for joining us here today. I'm really excited about this conversation. We're going to get into cryptocurrency, but not just cryptocurrency, but mining and how that can be a fantastic passive income solution. So thank you so much for joining us here today. I'm really looking forward to this.
Thanks for having me, Patrick. Really excited for this.
Yeah, so you're the founder of Abundant Minds, a Bitcoin mining company built with one purpose: to make passive crypto infrastructure investing simple, secure, and sustainable. So you've got a background investing in real estate, tech entrepreneur, that type of thing. So I appreciate all of those things. And before we get into more of your background, I want to just think about what our listeners looking for. You know, we're big into building wealth, and we think investing in the stock and bond markets are okay, but they're going to do what the stock and bond markets are going to do. We think that's more income replacement, maybe financial security than wealth building. And so I think that's a key piece. They're also looking at paying less tax. And I think there's a tax opportunity in here that I'm interested in exploring with you as well. So that's all good stuff. The traditional investments like real estate and stock market are, I'll say, increasingly volatile. You know, we've got some clients that our clients are all over the United States, but some markets, you know, the real estate market ran up and now it's falling off. The stock market's been on a good run, but I think people can get frustrated by the ups and downs there. And also, it can be tax inefficient, investing in some of the stock markets. It's like, man, I wish there was ways to generate more losses from some of these things like real estate and some of the things we're going to talk about today. So I'm excited about this conversation. Can you give us a little bit of your background on how you ended up here in the crypto mining space?
Absolutely. Well, it's a long and winding road. I'll try to keep the short version, but basically was fully into real estate. I saw that as you described, the best and most reliable way to build wealth and also get tax advantages along the way and get cash flow. And somewhere in that process, Bitcoin came on my radar. At first, just in a very small way, and I bought some and held it and saw it run up and thought that was very interesting, but didn't really pay too much attention to it until my wife, 5 years later, told me, hey, you should probably take a look at this again. And it was one of those periods of transition where I was kind of burned out on the full-time real estate gig and just thought, you know what, okay, I'll look back into this. And anybody who's looked at building wealth in the last 15 years has probably seen Bitcoin's performance and thought, I would like some of that. That looks really great. And that was the position that I was in. Was this looks like a really great opportunity. My one caveat is this doesn't throw off any cash flow. If I just go buy Bitcoin, I'm not getting any cash flow from this unless I go lend it out, which there's been wave after wave of essentially Bitcoin related credit bubbles where you can lose everything if you lend to the wrong counterparty. So I didn't want to do that. And mining came across the plate for me. And I had enough data center coursework in college. I had an engineering background and had built enough properties that I realized this wasn't even a very complex kind of data center to build. And mining was the only native way in the Bitcoin space to get cash flow. And it also came with this side benefit of, hey, you're now working in the physical world with physical equipment, which means
Hmm.
that there's a depreciation schedule there as well as
Yeah.
operating expenses. So you now have all the same tax levers that make real estate very attractive. If anything, maybe more attractive because it's a shorter depreciation schedule.
Yeah.
So that screamed opportunity to me. I first got in with what I was hoping to be a very passive way of doing it, which was just buying miners and sending them to somebody.
Hmm.
Unfortunately, I picked a bad partner to the tune of about $500,000. That was essentially a total loss and led me to build my company, Abundant Minds, where we offer the service that I'd wished that I had and the experience that I wished that I'd had so that we can help people navigate the space and get what I was looking for.
Yeah, I think you're hitting on a key issue here is I think the listener can be overwhelmed by the complexity of Bitcoin mining in general. Like, how do I get started? And then what's a trusted partner that I should be willing to effectively go into business with, right? I'm giving you dollars and I need to make sure that I'm getting some return on that. And so I appreciate you entering the conversation to really help clarify the opportunities that are out there. So I think this is fantastic. I think I want to start off with because we're specifically talking about Bitcoin. There's a bunch of other cryptocurrencies out there, but can we talk a little bit about the mining process, how Bitcoins are created? I think that's a decent foundational place to start, and then from there we can get into some of the nuance.
Yeah, absolutely. So to make it really simple, all you're doing when you're mining Bitcoin is taking electricity, energy, and then running that through a computer that's contributing work to the Bitcoin network and then getting paid for contributing that work. And the analogy I like to use is it's halfway between the military and Visa, where the miners are protecting the network. They're actually throwing up a wall of encryption to make sure that it's resistant to attack, but they're also helping process transactions. So they're a core infrastructure for how the network actually moves money. And for that work, they are getting paid in Bitcoin natively. And mining is essentially a lottery process. It's very, people like to say that it's solving complex puzzles, and that's probably one of my favorite, or you could say least favorite ways that people describe it, because it's
Mm-hmm.
like mostly close to accurate but not exactly. It's truly a lottery where each one of these computers is guessing trillions of times a second to find essentially a random number, and when they find the right random number, the next block of transactions gets added to the blockchain, and you get paid that block subsidy, which is essentially the reward for finding that. And the process repeats every 10 minutes to keep the network going.
Sure, I love it. So I guess one question I have is why would I consider Bitcoin mining versus, I'll say, just dollar cost averaging into, just every week or month or what have you, just buying $1,000 of Bitcoin, something along those lines. Why would I do one versus the other?
Yeah, there's two main reasons. It's the cash flow and the tax advantages.
Hmm.
So the cash flow kind of has two aspects to it. One, it's a recurring income stream that you're getting at a discount to market. So if Bitcoin's trading over 100,000 right now, people that are mining in our facilities are producing a Bitcoin for about 50,000. So there's an arbitrage there where you're actually making income and getting a discounted asset that's liquid, 24/7 sellable.
Hmm.
So if you ever need to exit it, you've got a liquid stream of cash flow. And if you do that over a long enough period with the same amount of capital investment, you can end up with more Bitcoin. So that would be point number one, is a cash flow stream where you get more Bitcoin for the same cash up front.
Yeah.
That often is reason enough for people to get in if they believe in Bitcoin, because the more Bitcoin you have, the better.
Hmm.
The second reason, though, is what we already touched on, which is those tax levers that you can pull. So by choosing to mine, you are, at least in our model, the owner of physical computing equipment, which has a 5-year depreciation schedule. Depending on how you choose to structure it, you can take bonus depreciation in 2025. That's about 40% upfront. Or you would be more of an expert in this than I would. Section 179 is very fun if you've got a dedicated entity for this business.
Yeah.
And so the other aspect of that is operating expenses, right? You've got physical equipment, but it's also essentially like a turnkey business in a way where
Hmm.
to operate that machine, you have to pay for electricity, maintenance, hosting, and all of that can be written off 100% against any income that you have. And it can often be prepaid too. So you can pull forward expenses that later on get recognized when the machine actually produces what it produces. So it just gives you more flexibility in establishing a Bitcoin position that actually has the ability to offset some of your income.
Yeah, no, I love this. And so one thing about Bitcoin mining is when I receive the fruits of my labor, right, on the mining side, that's treated as ordinary income, I assume. And one thing that you mentioned, and maybe this is outside of the scope, but if Bitcoin's trading at $100,000, and I mine some Bitcoin and it's at 50,000, do I pay tax on the 100,000 if I get a whole Bitcoin? Can you help me understand that piece, or is it like, no, I'm paying tax on the 50,000, and then in the future I'll pay the difference when I sell?
So you got it right, where you have ordinary income on the coin that you mine at the price that you mine it. That 50,000 would essentially be like your operating expense. So
Hmm.
when we say you're making a Bitcoin for 50,000, we're saying that's what it costs on an operating basis to pay
Yeah,
for all of those input costs. So that's essentially like your cost of goods sold or your
yeah.
operating expense that goes against that income.
Got it. Okay, this is great. So I love these two factors. If I can create passive income and then also have the tax advantages, that's good stuff. So I think one of the things that I'm considering next is Bitcoin is unique in the context of there's only going to be so many Bitcoins produced, right? Can you talk us through that? Like, am I investing in Bitcoin mining now, and then tomorrow we're going to be out of Bitcoin? Like, how is that going to work out?
Yeah, this is such an interesting question because it's one of the most fundamental misunderstandings of how mining works. And you're right, there is a limited amount of Bitcoin. At a certain point, there will be no more new Bitcoin to mine. So the last Bitcoin will get mined in the year 2140. So we've got well over 100 years of still more Bitcoin to produce, but it's on a diminishing return curve. So every 4 years, the amount of new supply that's getting issued onto the network is cut in half. So what's interesting about that diminishing return curve is yes, we've got more than 100 years till the last coin is mined, but 99% of the supply will be mined by 2035. So we're sitting at 94.5 right now. 10 years to mine another 5%, and then 100 years to mine the last one. So there is a sort of like window of opportunity for the next
Mm-hmm.
10 years that I think is really profound for people to still get a large chunk based on how much is left and how much work that's going to require to get that last measly 1%. Who knows how valuable that 1% will be in 100 years? I think that this is a extremely disruptive network and could be a meaningful share of global assets by that time.
Yeah.
Um, but the key here is miners are making money not just by mining new Bitcoin, they're also getting paid transaction fees. So whenever you're sending me Bitcoin or I'm sending you Bitcoin, I'm sending that across a network and paying a fee to do so. So it may only be a couple bucks for me to move hundreds or even hundreds of millions of dollars to you, but every one
Mm-hmm.
of those transactions has a fee, and that fee is getting paid to the miner who is putting that in the block. So right now, that's only 1 to 5% of the total revenue that miners make, but in historical periods where we've had really high congestion on the network, that
Mm-hmm.
could be even more than the new Bitcoin that gets mined. So it's more than 50% of miner income.
Wow. Okay. So can you explain the transaction income to me? Maybe step back, like I'm an 8-year old, because I know a little bit about Bitcoin, but this is a super fascinating piece to me, and I don't know if I fully understand. So I'm going to ask some questions, and you can clarify these. Do I get paid on just the initial transaction, like when I mine it and sort of transfer it to somebody else, or am I getting paid on? I'm going back to your Visa example that I thought was
Yeah.
pretty cool. I love the fact Visa's business model is incredible, right? Like, uh, every time I swipe my card, they're just making 3% of that transaction, to use round numbers. And that's not a lot of money, but once you start figuring out all the transactions out there, it's piles of money. So yeah, can you
Three
just talk us
percent
through
of
the income?
trillions is a pretty
Yeah,
nice chunk.
it is. It is. So yes, I'd like to understand the income potential out there, and I understand it's 1 to 5% of the revenue, but I'm just curious, big picture, how that works.
Yeah, you've got it exactly right. Every transaction that anybody ever moves along the network, a miner is getting paid for that. So as long as you believe that the Bitcoin network is going to be used on some level, people will be paying for transactions, which means that miners will be making money.
Yeah.
And the beautiful design of this system, like as an engineer, I just love to nerd out on how cool the design of Bitcoin is. The subsidy, which is those new Bitcoins that get mined every 10 minutes, that was only meant to be income for miners for a period while the network bootstrapped itself.
Hmm.
So it was designed to eventually be self-sustaining by just that, essentially that Visa fee that miners are getting paid to move money across the network. Early on, just like a startup needs funding and it's got to have some time to find product market fit and it's got to have time to get to critical mass, the network didn't have enough demand of people moving money for real use cases in the first couple of years to
Hmm.
sustain the business model of a miner. So the designer decided, hey, there's going to have to be a subsidy to get us bootstrapped into being a self-sustaining network, and it will just gradually wear itself out until miners are paid mostly by transaction fees.
Hmm.
And so you see these periods where transaction fees become a meaningful share of mining rewards, and that will only continue to be more true. So by the time we get to 2035 and there's less than one Bitcoin being mined every 10 minutes, you'll see probably more than 50% of mining revenues are going to be from transaction fees from people actually using the network, which is as designed.
Yeah. Okay. This is fantastic, because when I start thinking about Bitcoin and I look at adoption, right, it is becoming more and more a part of the everyday financial system, I'll call it. We're seeing more companies starting to accept Bitcoin. I was recently in El Salvador. I think everybody in El Salvador has a Bitcoin wallet, like almost government sponsored, which sounds funny to me. So I hear about those things and I'm like, all right, this is just meaning that the transactions are going to happen more frequently, right? It's not just something I just park in a wallet and hang on to and wait for the price to go up and to the right. It's one of those things where, okay, I'm going to use this as a real currency to buy and sell goods. And so where are we at in that process? I'm going to argue we're still in the infancy, but would you say, this is going to be, because I think about it, maybe this is a bad example. Feel free to correct this. Gold. Okay. Gold is one of those things that seems to have some of the same characteristics of Bitcoin, but I hang on to gold and it's sort of that safe asset. If everything goes haywire, my gold will retain its value, very much like Bitcoin. So yeah, how much is this going to turn into, a currency that's used more regularly? And I
Yeah.
know you're using your crystal ball, but yeah.
Well, there's so much to unpack there. I wish that we could talk for like 5 hours just on unpacking that question.
Hmm.
Gold is probably the best analogy that most people have for Bitcoin in terms of just understanding it at a base level. And I think you're totally right that gold is really successful as a store of value and not much else.
Hmm.
Very few people still use it as a medium of exchange or daily money, and that speaks to where we are in the life cycle of Bitcoin. So I would agree with you. I'd say we're still very early. It's less than 0.2% of global assets, and if you consider it the best form of non-sovereign money, then it should be quite a bit more than that.
Hmm.
But there's an adoption curve, right? So people adopt technology in waves, and it certainly takes time. Even things like electricity and the internet took decades before it was meaningfully penetrating the market. So we're only 15 years into this, and that can sound like a long time if you've seen millions of percent of appreciation, but it's really not that long in terms of getting the world to adopt a technology.
Yeah, this is amazing. Do you have more to add to that? Because I think there's like you said, this could be a 5-hour conversation, but I want to highlight one of the problems with gold is
Yeah.
I can have an ounce of gold. Okay. And an ounce isn't very much. You look at an ounce, you're like, wow, okay. But if the financial system falls apart, it's going to be really hard for me to take that ounce of gold and turn it into a loaf of bread. What am I going to do? Like shave off just like a tiny little bit of that and like exchange it for bread? That's not going to happen. Where Bitcoin, it's actually very easy to make a transaction with whatever amount I want. So I think that's a key distinction too. Sort of the doomsday preppers that are holding on to their gold. It's like, I think you probably need a commodity, right? Like get some toilet paper, some cigarettes, and alcohol. Those might be better bullets. I don't know, but
Yeah,
I don't want to get us too far. Yep.
that goes into there's 7 properties of money, and I might forget 1 or 2 of them,
Mm-hmm.
but the one you're talking about is divisibility. So the ability for people to actually cut it into smaller pieces and use it for transactions. But there's other properties of money: fungibility, scarcity, transportability. Um, I'm going to forget the other ones, but
Yeah.
there's all these different aspects to what makes a good money, and gold was basically the best thing that we had up until Bitcoin came along, and seemed to improve on pretty much every single aspect except for longevity, which is that it's been around for a while and people trust it, and it's been in use for a long time. But that
Yep.
creates opportunity as well. And what I think is really interesting, back to your question before this, is gold has done really well as a store of value, which is kind of like the base layer of what you need for something to be good money.
Mm-hmm.
And what Bitcoin is looking to do is essentially an upstart money. And so the first thing that it has to be good at is that store value characteristic, where it holds its value over time.
Yeah.
And it seemed to do that remarkably well. The next pin to knock down essentially is medium of exchange. So actually being able to use it in daily transactions. And you see this in some places like El Salvador, it's more in use and more adoption on the medium of exchange front. But at first, it had to be trusted to hold its value before it could really tackle this additional market of actually being transacted with on a daily basis. And then the third layer that happens only after it's become really embedded into society and people have used it for a long period of time is the unit of account. So our current unit of account, even globally, is the US dollar. Most people think in terms of what is this worth in dollars, even if that's not their native currency. And so that is the ultimate. If Bitcoin is truly successful, it becomes the denominator for how everybody thinks about value in a relative sense.
Yeah, I love this. And I just took a quick look at the 7 properties of money, and I'm just going to walk through those. And
Thank you. Yeah,
you hit
appreciate you.
on all of them, but yeah, I think this is good because it underscores this discussion. So durability, it must withstand physical wear and tear. So metal coins are going to be more valuable than paper, and we think about obviously this digital asset. As long as I don't put it in on a hard drive and throw it away, I'm pretty good shape. Same thing can be true of my metal coins, right? If I accidentally throw them away, it's an issue. Portability must be easy to transport and transfer.
100 million of gold.
Right.
Very hard and very
Heavy.
expensive.
Yeah. And divisibility, so if I've got $1,000 bill, if I can break that down into dollar bills or pennies, that's a key piece. Uniformity. So each unit must be the same as every other unit. So my $10 bill over here needs to be $10 over there. We see the same in Bitcoin. Limited supply, so scarcity. Inflation erodes that purchasing power. So we've already touched on that with the number of Bitcoin that would be produced. Acceptability, people must agree that it can be used for exchange. And then stability of value, it should retain value. It should be relatively stable over a period of time. So we can't have hyperinflation and have it retain its value. So those are the 7 characteristics, 7 properties of money. And I think those pieces are really interesting to think about when you're thinking about Bitcoin and how it starts checking a lot of those boxes. So great. Very good. Okay. So Bitcoin long-term, it's not going anywhere. I think since it's made it 15 years, we can look at that and go, oh, okay, it's past the infancy stage. It checks so many of those boxes. I think that's really important. Is there anything else we should be touching on when it comes to Bitcoin, just as an asset class, before we start getting into some of these other points of discussion?
It's well known in the Bitcoin space at this point, but I think still not widely circulated outside is how much adoption is coming from very large, very entrenched entities like
Hmm.
public companies, like sovereign wealth funds, and even nation states. So it's been talked about since the new administration came in that they would have a strategic Bitcoin reserve, and that was an executive order. And in the Bitcoin space, that is well known and established, but I find that most people are still inhabiting the world of a couple of years ago where there was still a fear of, governments don't like this, it's not going to be allowed to exist. And like aside from the technical argument of they couldn't destroy it if they tried, I really feel like we've crossed the Overton window of really everybody's recognizing that there was a break point, a shelling point that
Hmm.
they kind of can get involved or they can be left behind. And we're seeing that play out, the game theory play out of kind of leapfrogging from a very small country like El Salvador, making it legal tender to,
Hmm.
the largest economy in the world, deciding that there's worth having a strategic reserve of this stuff. So for the people that aren't up to date on this, I would just say we're in a very different period of how this occupies the global financial landscape than even a year ago.
Yeah. Oh, that's so insightful. You're right. Even the fact that we now have um, Bitcoin ETFs, right? Like some of the biggest players in the financial markets are going. This is something we need to be a part of. Is good. Hey, real quick, if listening to this episode has you thinking, I need to start getting more intentional about my tax strategy, you're not alone. Whether it's Bitcoin mining, bonus depreciation, or just making sure you're not overpaying the IRS every year, the right strategy can unlock serious long term wealth. If you're ready to take action, head over to vitalstrategies.com/tax. That's where you can connect with our team, get clarity on next steps, and start designing a tax strategy that actually supports the way you live, earn, and build wealth. Again, that's vitalstrategies.com/tax. We'd love to help you map it out. Okay, so now I'd like to shift our conversation to somebody is listening to this and they're going, okay, fantastic. I am interested in not just owning Bitcoin, but the mining process. Can you walk us through what the steps look like to sort of begin that journey?
Yeah. So, I mean, it starts with just curiosity and interest. So you've probably found us at this point. You've set up a call to talk to me or a member of my team. And on that call, we're essentially figuring out what your goals are with this. If this is primarily you stacking as much Bitcoin as you possibly can, if you're trying to have as much margin as possible, get it the lowest production costs, there's all these different variables that you can optimize for. And in the real estate world, it would be like deciding on prime commercial real estate versus a portfolio of class B apartments or single family homes. There's different characteristics, there's different reasons why you would have different kinds of properties,
Mm-hmm.
also different reasons why you would have different miners. So in that first call, we're figuring out, are you someone who is looking at this for the very long term? Is this mostly a cash flow play? Is this mostly a tax play? And then deciding what the path forward is for you. Mechanically, after you're ready to move forward, you decided, hey, mining is for me and this is how I'd like to do it. Then after you check out, you send in a payment. Your miners, depending on how many you're getting, we might already have them in the facility hooked up. So you could be running later that day. And all that needs to happen from you is getting on a call with our customer success team and learning how, if you don't already know how, to set up a wallet, to set up a pool where you can actually receive your proceeds.
Yeah.
So, in a very mechanical sense, we're never actually touching your funds. We can't actually even see how much you're earning. You're always going to be in charge of holding your own money. We're just here to help you actually do that and facilitate that.
Okay, it's so good. I guess one thing you mentioned that has my attention is depending on my goals, I can end up with I'll say different setups.
Yep.
Help me understand that.
So there's a crowd of people who are extremely bullish on Bitcoin, and I would probably fall in that camp. And for that person, you are expecting a very high compound annual growth rate of Bitcoin. You're expecting a different price outcome than other people who might be a little bit more skeptical or conservative.
Hmm.
And in that case, your decision framework for what to actually mine with is different. So the best analogy I have is in the options market. You've got in the money call options, which are lower risk, lower upside, or out of the money call options. So in terms of miners, the in the money call option would be the most efficient piece of equipment that carries the highest premium and is the most insulated regardless of what Bitcoin price does.
Hmm.
And for that premium, you are getting insulation, but you are also, I won't say capping your upside, but you have less upside than somebody who spent the same amount of budget on a lower efficiency miner and then was right about the price ripping.
Hmm.
So in terms of the kind of like optimization curve crossover, there's a point at which more lower efficiency miners in terms of Bitcoin price make you more overall net and more overall free cash flow than a smaller portfolio of high efficiency miners. So to boil it down, the risk averse are getting the most efficient equipment and still very happy with it, and you're still rewarded for getting your Bitcoin at a discount and still extremely happy if the price goes up way up.
Mm-hmm.
But the people who are extremely convicted and already know what they're looking at are usually getting a larger portfolio of less efficient equipment and then riding that upside when they're right.
All right. This is excellent. So I guess another question I have, and this is going to tie in, but is coming back to the tax piece. So we're talking about buying physical hardware here
Mm-hmm.
that's going to mine the Bitcoin for me. What is the life cycle of these machines? How long do I hold it before I buy another machine? Because I think about that sort of resets our investment, which gives us depreciation and all those other like fun facts. So, yeah, is this thing? I'll just leave it there. How long does my
Yeah,
machine last?
you're thinking about it exactly right. So there's a physical life to the
Mhm.
machine, which can be anywhere from 6 to 10 years. Part of the reason that we love operating in Oregon is that we can get on the longer end of that lifespan. It's very stable climate, super clean air, like very happy place for computers to live versus somewhere like West Texas, where there is a lot of mining, but unfortunately the lifespan of these things can be quite short. So at the end of the 5 year depreciation schedule, whether the machine is running or not, it usually makes sense to upgrade. So I would say that 5 years is a good point to expect that you're going to dispose of that equipment or resell that equipment and then get into a new unit so that you can restart your 5 year accelerated depreciation schedule. Um, Economically, it should also stay relevant for 5 years or more.
Mhm.
So there's these cycles, of course, price cycles. The efficiency of the units is always increasing. But what we found is that, especially in the last couple of years, the marginal efficiency gains have started to slow down. So you're not seeing these step change improvements in efficiency like 10 or 100x in the period of a few years, more like 2 or 3x over the period of 5 years. So those units after 5 years, you're going to be looking at rotating them anyway,
Mhm.
and that's a good way to think about getting in or out of a position. And you can always do it in segments as well. So you've got a
Mhm.
fleet, you might rotate a third of that fleet every 2 years, for example.
Got it. Yeah, I could effectively dollar cost average into my machines, right? Like I'm just consistently buying new machines and replacing the older ones. And is the thought process, I don't take it offline until it just is not working anymore, or is there, yeah, is there a point where you would intentionally take the machine out of service?
As long as it's making money, then it makes sense to keep it online.
Mhm.
The one thing I'll say is that the machines themselves have a little bit of a price cycle. So when, for example, Bitcoin price is going way up and those machines are making more money on a daily basis, the market will pay more for those machines.
Mhm.
So before 5 years, you might have an opportunity where the price cycle is lining up and you, let's say, paid $10,000 for the top of the line machine 3 years ago, and suddenly you can sell that same 3 year old computer for 15 or $20,000.
Yeah,
That might make sense to get out a little bit early, just so that you can hit the cycle correctly. Now, I am not an expert in timing markets, and I don't ever try to advise people to become an expert in timing markets. But
yeah.
I will say that there are certain times where it's opportunistic to change up the way that you're approaching that 5 year disposition.
Got it. Good. So To say on the tax side of things, if I have my mining hosted in Oregon versus West Texas, and I know you are not giving tax advice, uh, talk to your CPA or accountant. But is my the thing about West Texas is an income tax free state. There's no income tax in Texas. Oregon has an income tax. Is because my mining is hosted there. Would I be paying income tax in Oregon, or is it where I'm situated as a resident?
That's a really good question. Actually, I've never been asked that question before. So I would say definitely check with your CPA. I would assume it's where you are. But again, I don't want to give anybody bad advice. What
Yep.
is nice about Oregon is when you're actually buying the equipment, there's no sales tax. So that's one of the advantages of because it's living in Oregon, you save, depending on where you live, 5 to 10% of the cost of that machine, which can be couple $1,000s per unit if you're getting the high end units on that upfront sales tax. So in terms of income though, I would definitely check on that because
Yep.
I have not actually had that question before.
Yeah, and again, check with your CPA. My thought process is, and I think this would be something interesting to explore. Setting up, and you mentioned this earlier. Like if I have an LLC that is doing the running my mining operation, and I'm actively involved in that business, that if that's a pass through entity and it's registered in my home state tax would probably apply. But again, check with your tax professional. I don't think it would get attached to Oregon, but we've seen states like California is the worst. They're so aggressive on collecting their state income tax, and they find every reason possible to go pursue that. So again, talk to your professionals, but I think there's probably a good way around that if you're organized in a different state. So um, good, very good. Okay, thinking about the mining process. So we've set up a call. We are firm believers in who, not how. Like, let's find a who in our lives that can help us execute on these things, not figure out how to do it on our own. That learning curve is just generally very expensive, and so I love the fact that you're there and helping us really come up with a game plan on the type of machine that we're acquiring, because it's going to give us different outcomes based on our goals. So, how about the management, right? Like I've got these machines that I own sitting in I'll call it a data center
Hmm.
someplace, and who's managing all of this, like my uptime and making sure that I don't have to go. I love the idea of sitting on a beach and collecting checks. I don't want to have to fly out to Oregon and figure out why my machine's not turning on. So how are we handling all of that?
Yeah, that's exactly how and why we designed the service. Was most people who are looking to get into this are not looking for a job. They're not looking to learn how to be the best in the industry. They're looking for the right partner to manage it for them and keep them safe and treat the investment as if it were their own. And, just to provide a little credibility on this, I have my own miners with our company. So I'm eating our own cooking every day of the week. I don't manage my own miners. I manage my team, but I have very little to do with that day-to-day operation and maintenance because we've got a really capable team that are taking care of that on the back end. So fully included in that monthly hosting fee is all your electricity, it's all of your maintenance, it's all the cleaning, the diagnostics, the monitoring. You are not expected to wake up and keep an eagle eye on your machines. None of our clients really are looking to do that as part of their most joyful life and existence on this earth. They are looking for us to be their capable managers. It's sort of like, imagine if you had the best property manager in the world who just
Mm-hmm.
collected all your checks for you and just told you what you made at the end of the day. That's what this service is meant to be. And anytime you want to come see your property, come out to Oregon and see the computers running, we highly encourage that. We actually have a site visit 2 days from now where people will be flying in, both current and prospective clients. And we do that on a really regular basis, not just for the transparency and to show people how everything truly is working and this is a real thing. It's not vaporware, but there's so much to learn from this. And that was what I didn't really appreciate when I first got in was this industry can teach you so much, not just about money and finance, but about energy, about data, about the infrastructure that's powering our future. And I find that it's an eye-opening experience for both our team members, internal, who first travel to see the data center for the first time, as well as clients to see how it all works. And I find that many people, before they get into Bitcoin, or even if they've been in Bitcoin for more than a decade, who have never seen a mining facility, the first time that they see how all of this works is like a huge aha moment for them. This is a real thing. You can feel the physical effects of it. So, all that to say, this is fully passive. Our largest clients have never seen the facilities, but at any time that you want to come and take a more active role and understand it and make it more of an educational experience, that's part of what we're here for. This is
Yeah.
something that most people still don't have a firm grasp of. And so education is a core competency for us.
Yeah, this is good. So good. So one of the questions I have too is, and I think this matters, we're looking at technology and how it's starting to impact energy usage, right? I think Bitcoin was maybe the first to, you look at the energy usage to produce a Bitcoin, like it's out there. It's a real number and is a cost you should consider. Same thing's happening with AI. It's soaking up all sorts of,
Yeah.
resources from a, uh, just energy perspective. So to do that cleanly matters. Can you talk a little bit about how uh, you're using clean energy to host these machines and do it, as environmentally friendly as possible?
Yeah. So there's like this is another one of those things we could talk for hours about, but I'll keep it simple and say that we use the Columbia River Hydropower Network to power our facilities. And in most cases, we're using energy that otherwise would have been wasted and a surplus. So in shoulder seasons in this region, you've got hardly anybody who needs to use energy because the climate's so mild and a lot of energy goes to heating and cooling. And so the largest river network in the world will just let water run over the dam and not produce any energy. And what that does is if you don't have anybody buying the energy that could have been produced, it puts the cost of operations and maintenance on everybody who is using energy just to keep that infrastructure running. So every time we go into a community and actually make use of available capacity, we're using a renewable resource, but we're also using what otherwise would likely be a wasted resource and
Mhm.
then helping actually make the financial math work out for the infrastructure that these cities keep, because often electrical infrastructure gets very low utilization for what its total capacity is. So by us being there, we're using really great clean energy. We're making use of infrastructure that otherwise would go unused and actually helping our communities qualify to develop new infrastructure because now they have an anchor tenant that can help them
Mhm.
finance additional expansion, more economic viability and growth in their communities. And it's a really cool, just holistically beautiful way that we can come in and not be these like energy poachers who are taking free electrons from people that need them, but
Mhm.
actually having a really holistic impact on communities for the better.
This is great. So my next question is now on the investment side of things. And I know that we should also, just like we're not giving tax advice, um, we're not guaranteeing any returns either. So can we talk a little bit about if I invest $100,000, where am I looking at from a return perspective if I make an investment like this? Do you have some range of returns that you've seen over time?
Yeah, there's a way of looking at it historically, and then a way of looking at it kind of in a vacuum. So if you take out sort of all of the variables that are constantly moving, like price and the competition on the network, if we just assume that Bitcoin stays at $100,000 and doesn't move for the foreseeable future, that $100,000 investment is getting you 10 top of the line miners, and they're yielding somewhere between 25 and 35% a year, just assuming flat Bitcoin price.
Hmm.
Now, the more that Bitcoin goes up, that only juices your returns, especially if you hold on to everything that you're mining rather than selling your coin to actually fund your production. And historically, the period from 2020 to 2024, Bitcoin saw about a 6x return. If you were mining through that same period, it was about a 10x return.
Got it. That's so insightful. I think it's good to know how is my mining performing versus just owning um the Bitcoin on its own. And what that's not factoring in is the tax benefits of making that investment because You know how much depreciation I get when I buy a Bitcoin? Zero. So that's really good. Um, all right. So I think you've opened up our eyes to what it means to really mine Bitcoin, how to make that investment. Is there anything else we should be talking about in regards to the mining process that we haven't already covered?
Anytime I hear someone talk about an investment that's got very high upside and no risk, my alarm bells immediately go off.
Yeah.
So I just want to qualify this by saying my first venture into this was very difficult and I picked the wrong partner and it was not a rosy return picture. And so for these tax benefits, for this additional return on top of Bitcoin, you are taking on the risk of not only working in the physical world, but choosing a partner to operate for you. So I just want to say, like, there is a reason that you're getting higher returns. It's because you're taking on more risk, and we make every effort to mitigate that risk for you. But I want people to go in with eyes wide open. There have been issues in this space. This is something that, if navigated poorly, is not outperforming Bitcoin, and there's plenty of opportunity to mess it up. So picking the right partner is important. For anybody that wants a deeper dive into diligence, if you follow me on socials, like Instagram would be Beau.Turner21, or you can message us at Abundant Minds on pretty much any social media network. Just send the word diligence, and I've got a 20 question sheet so that if you don't feel like we are the perfect provider for you, but you still want to do this, you can ask all the right questions to make sure that you're getting in safely. So just encourage people. Most don't have an expert level understanding of the industry. And if you don't, you got to make sure you're asking the right questions to your host.
Yeah. Thank you, Beau. I do appreciate that in general. I love that you're here to just let's bring awareness to this discussion. Let's get Bitcoin and the topic of mining out there because I think you're right. I don't think I don't believe it's going to become less a part of our financial lives. I think it's going to start taking a larger role. And so the more we can continue these conversations, the better. So we'll have links to all the things that Beau just mentioned in the show notes. I also need to point out that abundantminds.com is a fantastic resource. There's YouTube channel, blog post, podcast, all sorts of data, however you want to consume it, video, audio, read it. It's all there. And then if you want to connect with Beau and his team, you can just click the book a call link and it'll get you plugged into all the good work that they're doing so you can learn more. So this is great. Beau, anything else that we should talk about before we wrap up?
I'd love to leave your audience with this, and you touched on it a little bit, and I just want to reinforce it that this is technology that's not going away, and even more so, it sits at the intersection of some of the most important trends that we have going on in the world, and especially in how people are thinking about investments, whether you're talking about AI, data centers in general, energy, the reinvention of the financial landscape. We have a really unique opportunity to sit and touch each one of those with this one vehicle. And so whether you start mining yourself or not, or you're just getting a single unit to kind of try it out, what I have found to be true is that even more so than the return, and the returns are great, is the ability to learn about how the world might look in the future. Because if you wake up 10 years from now and don't understand what's going on, it's probably because you ignored one of these 3 or 4 mega trends that are really shaping the investment landscape.
Yeah.
And so I just want to encourage people, whether you're working with us or not, try not to bury your head in the sand and just keep on the forefront of learning about this. You can always have trusted advisors who are more of an expert than you. I would highly recommend it. But it's important to wrap your head around how you think the world might look and position that way.
I think that's vital insight. Thank you so much, Beau. And when I think about the stakes that we're looking at here, engaging in mining or with Abundant Minds or just exploring Bitcoin in general, it's offering a path to, I'll say, sustainable passive income. And it's aligning our listeners' goals with autonomy and long-term wealth, growth and preservation. I think that is all like really, really important. And we think about what you just talked about, you missed the train, right? The train's left the station and it's hard to catch up. And continuing with traditional investments, fine. I don't think you should put all of your eggs into the Bitcoin basket. I don't think you should have all of your eggs in any particular basket, but get the opportunity for great returns. The tax piece, I think, is fantastic, and missing out on those, opportunities in the evolving financial landscape is problematic. So, I think this has been wonderful. Bo, I'd love to talk to you more about just what this opportunity looks like, because I'm standing here going, man, this is a fantastic piece that I think people could be adding into their portfolio. So a question I have there is, if I want to try this out, if I want to just like test run some mining, is there a minimum threshold of investment that makes sense? Is that $5,000, $10,000, $100,000? Where do we start if we want to just like dip our toe in this process?
Yeah, most of our clients are coming in around that $100,000 mark. That seems to be the right threshold. But we have plenty of clients who just get a single unit, and our highest tier single unit is right around 10K right now, which if you're just dipping your toe in, I would say that's probably what you want to get. The very bottom end of what you can spend, and it still, I think, makes sense and be worth your time, is about $7,000.
Okay. This is great. I'm going to ask one more question that is sort of a geek tax question. So,
Please.
Are there people, I'll say, self-directing Roth IRAs into this investment? Because if I have a bucket I want to build into, $1 billion, it's in the Roth IRA because it's never taxed. And so, just thinking through some of these conversations, I'm combining a few podcast episodes together here. I believe the episode, if we publish them on schedule, the episode that's going to come out before this one is all about self-directed and pursuing some of those opportunities. And I really think there's an unlimited set of opportunities there. But in my mind, I'm like, cool, I'm going to take my Roth dollars and go invest in a mining operation and just let it kick off some cash flow for me. So
yeah.
Yeah.
The short answer is yes. The long answer is you got to make sure all of your boxes are checked.
Yep.
Just like you can't move funds without some penalties. You want to make sure that your custody setup is properly segregated so that you're not messing with all of the guidelines around it being properly shielded in an IRA. And there's a couple of other things that are probably too deep into the weeds to go and are more individualized. But I will say the short answer is yes. Just make sure that you've got a competent advisor helping you set it up in the way that it's not going to get deprived of the benefits of being a tax advantage vehicle.
Yep. And this all falls back into who, not how. Please don't figure these things out on your own. We've got trusted advisors. If you need more information, reach out to us. We're happy to get you plugged in. But we believe you should have a who in your life that can help with the self-directed side of things. You should also have a who in your life that gets you going on the mining side. So, Bo, this has been wonderful. I think there's so much opportunity in front of you, in front of all of us here with the mining of Bitcoin. I think we're still in the infancy. I know people hear the price of a Bitcoin at $100,000, and it's like, man, that sounds like a lot of money. But I think as adoption continues to grow, the value of the Bitcoin is going to continue to grow as well. So,
totally agree. Still super early. Thanks for having me, Patrick. This is great.
Thanks so much for tuning into this week's episode of the Vital Wealth Strategies podcast. I hope you found real value in today's conversation and that it gave you something to think about as you build your business and grow your wealth. If this episode helped you in any way, do me a favor and share it with someone who could benefit from it too. And if you're ready to explore what tax-smart strategies look like in your world, don't forget to head over to vitalstrategies.com/tax. Our team is here and ready to help you take the next step. Remember, you're a vital entrepreneur. You're vital because you're the backbone of our economy, creating opportunities, driving growth, and making an impact. You're vital to your family, creating abundance in every aspect of life. And you're vital to me because you're committed to growing your wealth, leading with purpose, and creating something truly great. Thank you for being a part of this incredible community of vital entrepreneurs. I appreciate you and look forward to having you back here next time on the Vital Wealth Strategies podcast, where we help entrepreneurs minimize their taxes, master wealth, and optimize their lives.